Palantir reported earnings Monday night, and the market reaction tells the story. Shares surged to 166.40, up 4.2% on the day and an additional 3.5% after hours. Be sure to watch this video all the way through, because I'm going to share with you where the whales are loading up in the options market and where our Discord is loading up on too, so sit tight. While Palantir's earnings beat was impressive, here's the reality. The options market had already priced in an 11.9% post-earnings move, and as of now, the stock is only up about 5%. That's a huge problem for the wave of newbies who loaded up on out-of-the-money calls, expecting a lottery ticket payday. This isn't a victory lap for them, it's a hard lesson in how implied volatility crush works after earnings. Those who front-loaded contracts at inflated premiums are going to wake up to see that even if Palantir's stock price is higher, their options could actually lose value because the big expected move never materialized. That's not how we play it, and it's not how you should be playing it either. Instead of chasing the hype, we focus on structured, high-probability setups. And tomorrow is likely to deliver one. We expect a shakeout at the open as those overpriced calls deflate, which could set up the best entry point for the next leg higher. If you want to know exactly how we're trading this move, make sure you subscribe to the channel and grab a 7-day free trial to our live trading alerts. You'll get our Palantir options swing trade in real time when we open it tomorrow. Check the link in the description to get these alerts sent directly to your mobile device. Here's where it gets interesting. Options pricing predicted a plus 11.9% move post-earnings, yet the actual move came in at just plus 3.7%, significantly lower than implied volatility expectations. Over the last 13 quarters, the options market has overestimated Palantir's earnings move 38% of the time. For context, the options market historically predicted an average post-earnings move of plus 13.8%, while the actual average has been 16.3% absolute terms. This highlights Palantir's tendency to surprise traders with higher than expected volatility, though this quarter's muted move bucked that trend. In other words, this quarter's reaction was much calmer than the options market anticipated, but the strong earnings beat and guidance upgrade leave plenty of room for bullish continuation, aligning perfectly with our point-and-figure analysis shared last week. And if you've been following our channel, this move shouldn't surprise you. Last week we highlighted that a strong hold of the 155 level dramatically increased the odds of continuation higher based on our point-and-figure analysis. Today, that thesis is playing out in real time. Do me a solid and smash that like button. It's the only thing I ask.
Palantir's post-earnings options activity paints a clear picture of where traders are placing their bets and why. Following the company's earnings release, which delivered a revenue beat and stronger than expected guidance, options traders aggressively targeted the 165 call strike. This strike saw a massive surge in open interest, climbing by more than 21,000 contracts to a total of 26,809, with nearly 19,000 contracts traded on the day. This level has effectively become the new center of gravity for the stock, reflecting broad market conviction that Palantir must hold above 165 to maintain its bullish momentum. The activity did not stop there. The 170 calls also attracted heavy trading interest, with nearly 30,000 contracts changing hands and open interest rising by more than 6,500. This activity reflects traders' expectations for a continued push toward the R3-R4 pivot zone, a target that coincides with our previously discussed point-and-figure analysis. Meanwhile, the 16750 strike saw a sharp increase in open interest as well, rising by nearly 10,000 contracts, indicating that traders were eager to chase the breakout momentum as Palantir cleared the 160 and 165 thresholds. Perhaps most intriguing is the surge in open interest at the 180 call strike, which added nearly 18,000 contracts. This level represents a speculative moonshot bet, but its size suggests more than casual interest. It raises the possibility of a gamma squeeze scenario if momentum accelerates and market makers are forced to hedge aggressively, pushing the stock even higher.
Altogether, the options market has built a strong bullish structure between 160 and 170, confirming that Palantir's post-earnings move is more than a one-off spike. Traders are now pricing in consolidation above 165 as a base case, while also positioning for the potential of an extended rally toward 170 to 175, with 180 serving as a speculative upside target. This aligns closely with our prior technical thesis. Holding 155 and clearing 160 would set the stage for the next leg higher, and the options market is now validating that move in real time. Failure to spring from here means the breakout morphs into a bull trap, and that opens the door to 173.9 to maybe 171.4 very quickly. Let's break down the numbers. Palantir reported earnings per share of 0.16 versus expectations of 0.14, and revenue of $1 billion versus the $939 million estimate. Even more impressive, Q3 revenue guidance came in between $1.08 billion to $1.09 billion, far above consensus at $981 million. This isn't just a beat, it's an acceleration story, with management signaling strong demand across both commercial and government segments. Now, remember what we discussed in our last video, the 155 support level. That zone acted as a springboard, keeping price action well within our rising channel. We pointed out that as long as price held above that support, the bullish continuation setup remained intact. And today's post-earnings surge confirms that view. Price exploded through key resistance levels and is now approaching our next point-and-figure upside targets around 170 and 176. Above there, the door opens for a test of 181, the next major P&F objective. This is why we emphasize having levels mapped out ahead of earnings. Instead of chasing headlines, we had a clear plan. Hold 155 and the path of least resistance remains higher. That's exactly what happened. It's also worth noting the strong volume behind today's move, adding conviction to the breakout.